Welcome to Layn University. My name's Conrad Layn. Layn Credit University. My name's Conrad Layn. I'm gonna go right in detail on how to build your personal credit besides with a credit card. You can actually build it with a secured loan. And with a secured loan, for those that know what this is or don't know what it is, it simply just means it's a collateralized amount that you give to a banking institution, and they give you access to a loan product. So traditionally speaking, loans work like this. Say you want a loan for $5,000. The bank will loan you the $5,000, and you have to pay it over a duration of maybe 4 years, 5 years, 2 years, 1 year, whatever the case, whatever the loan terms are. There's usually some type of interest. Secured loans work in the reverse. So this is how it works. You go to a banking institution, your credit union, banking institution that you trust, doesn't matter what the case is. You go there, you say, hey, I want a $1,000 loan, or I want a $2,000 loan, or I want a $10,000 loan, or I want a $100,000 loan. And what you have to do at that point, you have to actually give them the money. So say you want a $5,000 loan, you have to have the $5,000 cash on you, give it to the banking institution. And at this point, they'll actually start reporting that you have a secured loan with them. But the cool thing is the credit bureaus see it as just a loan. So what happens is you build credit off money that you already have, because maybe you went through bankruptcy, maybe you have bad credit, maybe you have credit, even if you have decent credit, but maybe you're not, they won't extend a loan to you. To start building a banking relationship with them, and to also start building a relationship with the credit bureau, showing that you can actually afford a loan, you go to the bank institution, they give you a CD, a certificate of deposit, where they put the money in this account where it put in a savings account, and they extend you a credit. Now they feel safe. So maybe this bank didn't want to give you a loan because maybe for some reason you have bad credit, maybe even you have good credit, but they just don't trust you, don't want to give it to you for whatever the purpose is. Maybe your income's not high enough, whatever the case, maybe you haven't worked for a while. Secured loans is a way for anyone typically to go to their local credit union, local banking institution, and ask them for a loan, but you just switch your money. So if you want $1,000 loan, you say, hey, I want $1,000 loan, here's $1,000, here, you can hold it for me. The cool thing is they'll extend a loan to you, but they already, because they have your money in their possession. That's a quick tip. Two other companies that also help with this, and I'm not getting paid any type of referrals, is one called Self, and they give you a credit builder loan, and also another one's called Credit Strong. I left the links in the video description below if you're interested in those two links. Very important. Do your own due diligence, research, and make sure it works for you. But that's how you actually start building your credit. Even if you went through a bankruptcy, if you have bad credit, if you have no credit, if you're young, if you're older, doesn't matter if your credit's been totally demolished, destroyed, if you already have good credit, doesn't matter. If you want a loan extended to you, go to a bank institution and give them the money that you desire. So if you want a $500 loan, if you want a $1,000 loan, if you want a $5,000 loan, make sure you have the money in your possession. This is good for someone who already has the capital, and then you can start proving, hey, first thing, I already have the capital, here's the money, hold it for me, and they extend you a loan and you pay back into it. And that's all you have to do. It's as simple as that. It's basically just a switch of money, but this is for people who already have capital. It's just another tactic to build credit. And this is a great way to start building your credit with secured loan. That way it reports to Equifax, Experian, Transient, 3 major credit bureaus, and they start reporting that you report good credit history because you already have the money on their account. So that's how you do it. Probably sounds a little confusing, but it's as simple as that. Go to your local banking institution, ask them about secured loans and what their qualifications for it is. And at that point, they usually hold the money for maybe 2 years, 3 years, for as long as you pick. And then at that point, they return your money back to you. That's the cool thing about this. It's a loan in the sense that they report to the credit bureaus, but remember, it's your own money. So you're bringing $5,000 to the banking institution. They report to credit bureaus that you're paying your payments on time because you already gave them the money, but they're basically just making you look good. That's about it. Anyways, love you guys. Follow me on Instagram, Conrad Layn. Follow me on TikTok. And this is Conrad Layn. Conrad Layn out.